The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. E.G. Tax.
It's Ask the Tax Lady with Esther Gulius and E.G. Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and I'm here to help you to do your taxes, get your taxes, figure out how to do things. We certainly want to help you. I'm from EG Tax. We have 33 area offices to serve you. Today, we're only open until 5. Tomorrow, we have 2 mall offices that are open, the McKinley Mall and the Niagara Factory Outlet, and they'll be open mall hours. And then the rest of the week, all of our offices are open 9 to 9. And I have my buddy, Chris Fabian, here with me. Isn't it great to be out of the office, Chris?
It is. It's incredible. It's a nice feeling.
It is, and there's no snow. So,
well, sort of.
Well,
it's not snowing. There's snow on the
ground.
ground.
I'm happy.
But I'm not complaining about what happened.
No, not at all. Not at all. Looked like a snow globe this week, but anyway, and we're going to talk, we're talking taxes, so if you have any questions, comments, if you are sitting there pulling your hair out, 803-0930, 803-0930, star 930 on a cell phone. And we kind of have a topic today of business issues, some things, whether you're starting a business, thinking about having a business, do you have a business, what's a write-off, and all that kind of stuff. But we've had 2 people that have been waiting since the top of the show. Actually, they called before the show, and we're going to deal with this first. So we're going to go first to Joan in Florida. Is it snowing there in Florida, Joan?
No. It's about 72 today.
Oh, it's tough, isn't it? I'll tell you. It's tough when it's 72. It's 41 here. So.
Oh, boy.
Well, what can we do for you, Joan?
I don't know if you can help me. I got a form 1099-B.
Okay.
Proceeds from a broker and barter exchange transaction.
Correct.
Loose cent, taxes, and they want to know the cost in 92 when AT&T split it, and then they split again in 2006, and I have no idea.
Okay, if you cannot go back and reconstruct your basis, then your basis is 0. So now, so way back when you had telephone company stock, right?
Mm-hmm.
And then out of that telephone company stock, after all the splits, you were given some stock. Were you not given the Lucent stock?
Yes.
So there is no basis. Now, all those years that you had the Lucent stock, were you getting the dividends or were you reinvesting them?
I could have been doing both. I don't remember.
Okay, so
well, first of all, how much are we talking about? Did you get?
It's piddle. I've only got 17 shares, and I think they're only worth $46.
Did you sell them, Joan? You did sell them. How much did you get for them?
$2.76 a share, but I didn't sell them.
If you got a 1099-B, you did.
Oh,
you sold them.
The company did.
Okay, but that means, and you got the money, so you have to report it now. So how many shares do you have?
17.
Okay, so we got 14. It's about $35. So, Joan, do you have any other source of income besides this?
Well, my
your Social Security.
Social Security.
And your pension?
Yeah.
And how much is your pension?
It's small.
How much?
$700.
And anything besides that?
No.
Sweetie pie, you don't have to file a return. Don't worry about it. Just go drink a cup of coffee out in Lanai and enjoy your afternoon.
But they said this form was sent to the IRS.
It is, and so was your Social Security sent to the IRS. But you're still under the minimum filing requirements, so you can go have a cup of coffee out in the Lanai.
Oh, okay.
Okay, sweetie?
No, you helped my girlfriend a couple years ago, and I remembered her telling me. And
well, I want to help everybody. So you just go enjoy that darn 70 degrees, and we'll be up here in Buffalo freezing our cadotes off. Okay?
so much.
Thank you, dear. Bye-bye. That was great that you honed in on that, Chris, because it's true. Sometimes you get in the middle of the forest and you're concentrating on the trees and you got to look at the whole big picture.
Right,
So
exactly.
she was way under the minimum filing requirement. So, if you don't come to a certain amount of taxable income, you don't have to file.
Right.
So,
And even if, say, she made $15,000 in a pension, okay, she would have had to file, but the long-term gain
was at 0%.
would have been 0% and
So
would have
she
had
still
no
wouldn't have
effect on her
and
tax
she's
return.
in Florida, so there's no taxes there anyway, unlike New York. 8030930, 8030930, star 930 on a cell phone. And our second guy that was waiting was Blaine. Hey, Blaine.
Hello, Esther.
How are you?
I'm pretty good. How are you?
Good.
I've listened to your program through the years, and in fact, since 2011, we've been taking our taxes to the Blaisdell branch.
Well, thank you.
Hello?
Yeah, thank you very much.
Now, this year they were done wrong, so I took them back. The amended was done wrong Monday. Okay, I called the branch Tuesday. No one answers. I called corporate. They didn't get back to me till Thursday. Friday, the lady I talked to said she would talk to her manager and someone would get back to me, but nobody has. So,
well, we will make sure we get back to you right away. Will you do me a favor? And will you hang on, and I'm going to get your phone number, and I'll make sure we get to it right away, okay?
Well, I appreciate that.
All right. I'm going to put you on hold, okay, Blaine?
Right.
All right, thanks. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're going to talk to Chris. Maybe you can get to Blaine and get his phone number, too. Larry in Georgia. Hey, Larry, how you doing?
Actually, darling, I'm doing good. It's so nice to hear about you and my wonderful friends. Oh.
Yes.
Well, welcome home.
Yeah, where'd you go? I knew you went someplace.
Australia, Malaysia, Indonesia, and Singapore.
Wow. Did you have a great time?
Esther, indescribable. I mean,
that's great.
I tell you, at this point, I'm stupid tired, but I'll get over that. Oh, by the way, FY, I will contact our mutual lady friend. I didn't forget that. Thank you.
All right. Hey, you got a question, Larry?
I do.
All right.
Listen, I need to find out from Chris and Tiffany how much I need to send in for my estimated taxes. I can call you back on Monday on that if that's convenient.
Yeah, why don't you just email me and Tiffany, Larry? That would be the best thing, and we'll get back to you on that.
Then go to bed, Larry.
Really. Thank you.
All right, thank you, sir. Bye-bye. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We want to help you with your taxes. We're going to take a short break, and we'll be back on the other side. Sugar pie, honey bunch. I know that one. That's back in my day. Thank you. I'm Esther Gilius, the tax lady from EG Tax. Can't help myself. By the way, Blaine, we called our office. They got the amended return fixed, and they are going to be calling you any minute. So that took care of Blaine's problem. So anyway, I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to go to John in Orchard Park. Hey, John.
Hi, Esther.
How can we help you, sir?
Well, last year my son started a small business, and he incurred a lot of costs just getting it started, and had some small revenue, so probably took a pretty good loss. Now this year he switched it over. He's in the process of switching it over to an LLC.
Okay.
My question is if he shows the loss on last year's tax return, this year's last year's tax return on a Schedule C, will that carry over to this upcoming tax year?
All right. First of all, if it's a solo member LLC, it's still done on a Schedule C. So it's the same form. It's just that has it listed with New York State as a limited liability company. So if it's if he's the only owner, sole proprietor, it's still done on a Schedule C. Now, if he loses money in 2016 when he files his return, and he ends up with a net operating loss, he can do a Form 1045 and carry that loss back or carry it forward. But if he had income in the past, he may want to carry it back and recoup some of the taxes he's already paid. So so it's going to be the same form both years.
But you'd have to do an amended. Is that?
Well, no.
No. It's a 1045 carries it back automatically. Is when he takes all of his expenses, is he in a negative position on his tax return overall?
He would. He certainly would be on this current one.
Right, but does he work? Does he have a W-2 elsewhere?
Yes.
So is the loss on the business, and it's a bona fide business, right?
Yes.
Is the loss on the business more than his W-2 income?
No.
Okay, so the loss in the business is going to wipe out a lot of the W-2 income. That's good, and so he doesn't have a net operating loss. But had it wiped out all of the other income, and he ended up with when he was all done with the taxable income, negative taxable income, he would have had a net operating loss. But he doesn't, so he's got no problem. He's going to do a
there's no carry forward.
Right.
The loss just is used to subtract from his wages.
Right, and you're going to do a Schedule C this year and a Schedule C next year.
Okay.
Okay.
So I guess my only question is as far as carry, if you would amend or whatever, use it to wipe out the income for this year and see what happens, but you can't carry it if he wanted to carry it forward.
He can't. Let's say he makes $15,000 loss on his Schedule C, and on his W-2 he's got $25,000 in wages. He's going to offset the 15 against the 25, and he's going to have $10,000 adjusted gross income. Then he's going to apply a standard deduction of $6,200 and personal exemption of $4,050, and he ends up with no taxes due. That's it. He can't carry it forward unless the bottom line, the bottom taxable income, is a negative figure.
Okay.
Okay?
I got it. Thank you very much.
All right, John. Thank you. It was interesting because I wanted to kind of talk about business income.
Yep.
And so that's really important. A limited liability company, solo, single owner
Yep.
is done on a Schedule C, just like you would have done it if you were a sole proprietor.
Right.
So it's not like you have to put it
Yeah,
on.
the only difference is you have the umbrella of protection.
Right, which is a really good idea.
Yep.
Let's go back to the phones, and we're going to talk to John in Niagara Falls. Hi, John.
Hi. How you doing today?
I'm good. What can we do for you?
Quick question on the employer I work for is offering a early retirement package where basically there's going to be a buyout package for me individually about $40,000 to $50,000 depending on vacation time.
Okay.
And that'll be paid out this year. So what our HR has told us is that'll be just like a pay. It'll be taxable income.
Right.
Okay. So my question is, it's going to be one lump sum payout. Should I change my withholding at all with that, or is there any ideas that you would have that would help from a tax standpoint?
Two things. First of all, for your withholding, they're probably going to treat it as a bonus. So no matter what you claim, it's not going to help. They're going to automatically withhold 28% from the federal, your Social Security, Medicare, and the maximum from New York State. Okay, so you'll end up with about 54%.
However, you're probably going to
The second thing I was going to say is if there is a 401k, okay, you can you max it out. Put 20. How old are you? Are you over 50?
Yes.
Then you can put $24,000 in your 401k. So you cut that in half,
so that the 28% is only taxed on what's left after you take out your $24,000 and put it in a 401k.
Okay, and that's something that I was thinking of that, but I didn't realize I could. Yeah, so I'll have to check to see exactly how much I could put in. And
you can put in $24,000.
Yep.
It's called an elective deferral, and you can put up to $18,000 if you are under the age of 50, and $24,000 if you're over 50 or older. So you can put that in. Now, a lot of people are going to say, "Oh, but then he doesn't get the money." You do get the money. The money's sitting there in a 401k, and then in an IRA, because you're going to roll it over into an IRA after you get out of the workforce, and then you can take that money out next year or the year after, and you control the withholding.
Beautiful.
Okay.
Good advice.
All right. Thank you.
Yep. Bye-bye.
Bye-bye. That's what we love to do, help
people,
right?
Definitely.
I'm Esther Gullius, the tax lady from EG Tax with Chris Fabian, 8030930, 8030930, star 930 on the cell phone. We sure want to help you, and we're going to go to Craig in North Tonawanda. Hi, Craig.
Hi, Esther. I lost my job 3 years ago. The unemployment ran out 2 years ago. In the meantime, since then, I have been helping my parents. I'm basically their caregiver. They're both 82.
Okay.
And they have been giving me $1,000 a month. What do I need to? I didn't claim what they gave me last year, mainly because with the amount that they gave me, it was like 6 months worth, so it was $6,000. And doesn't that fall under the gift tax?
Okay. So if you're providing a service, which you obviously are, then that would be taxable income to you. And technically, because you're probably going into your parents' home, correct?
Correct.
They're supposed to be withholding FICA and Medicare for you and giving you a W-2. All right? So you still have time to kind of unscrew the spaghetti, so to speak. Last year, if he would do if he goes back and fixes 2015 and claims that he'd get an earned income credit.
Right. Yep.
So it'd be definitely worth your while to get the earned income credit. And this year, you'd have time to fix it because your parents returned because they're your household employee. They'd have to pay the FICA and the Medicare and New York State unemployment a little bit here and there. So it's going to cost them something. But then on your return, you'll have a wage statement, and you'll get an earned income credit, and you don't have to pay taxes. So you actually have money coming back for you for 2 years.
Okay.
Bleh.
Yeah. But not to also mention, heaven forbid if something happens and your parents get worse and they go into a nursing home, they could go back and look at the money your parents gave you.
That's right.
And say, well, we need that to pay for the nursing home.
Right. Because there's a 5-year look back. And so if your parents go through, it's a little bit of a gyration to do. And if you use a professional, there's somebody that knows how to do it, and we're professionals if you want to use us. But anyway, because then you really fix it so that $18,000 that your parents has given you over the last 2 years is accounted for as a bona fide expense, and it won't go against their spend down.
Okay.
So anybody you know that is a qualified accountant, tax professional can help you, but you do have refunds coming, and like Chris says, it's a great thing from the spend down portion in the event that they have to go into a nursing home.
Okay. All right. Thank you so much.
All right, Craig. Bye-bye.
And then the parents could also write it off as care for their house and use it as an itemized deduction.
That's exactly right.
For medical.
Right. If he's providing medical. But it sounds like he is.
If he's caring for them, bathing them.
That's right. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. And we certainly, all of our offices are open 9 to 5 today, correct?
9 to 5 today. McKinley Mall and Niagara Falls Factory Outlet Mall open tomorrow during mall hours. And then we reopen Monday at 9 a.m. to Monday through Friday, 9 to 9.
Now, talking about business issues, the first thing I had on my list was become an LLC. So those of you that are operating small businesses, I don't care if you're a hot dog stand, snowplow guy, doing landscaping, a daycare provider, the first thing that I would tell you to do, it's not going to save you any income taxes, but it is going to save you the possibility of liability in the event that somebody trips at your business, gets hurt because of something you do, and that would become an LLC. How do people become an LLC, Chris?
Well, you apply through New York State. You can do LegalZoom, biz filings, call a lawyer. There's certain requirements you have to do for advertising yourself, but it's pretty straightforward,
and
easy.
Pretty easy.
Yep.
Right.
Yep.
And so then what happens is all that they could attach, if there is not gross negligence on your part, would be the assets that the business has.
Right. So if you could say you have a $3 million home you own, just for an example, but the business only owns a $10,000 piece of equipment, all they can get is the $10,000 piece of equipment.
So it's like free insurance. And so that's the first thing you want to do. And then all you have to do is, if you're a sole proprietor, and you have an LLC, you still do a Schedule C like you always have. The other thing that people say to me is, I really don't have to do this because I don't have a license. So it's just like this guy that was helping that was helping his parents. In effect, he's on a Schedule C.
Yep.
Well, he could be on a Schedule C if he were holding himself out for other people. Right?
Definitely.
And so even though he may not be licensed, you still have to report your income on a Schedule C and reduce it by your expenses.
Yes.
Right?
Yep.
And then you also pay self-employment tax.
Double the Social Security and Medicare on the net profit.
Right. And so the other thing is, if you're in business for yourself, you want to make sure you keep track of all your expenses. And basically, if you spent money to make money and it's ordinary and necessary, all right, you're not extravagant in your expenses, then it's going to be tax deductible. And so you put in your income, you take out your expenses, and you pay taxes and FICA on the bottom line.
That's right.
And under the table income is not what we're talking about. There is no such thing as under the table income.
Right.
You have to make sure you report all of your income. I'm Esther Gilius, the tax lady from EG Tax. We're going to break for news. We'll be back on the other side with your phone calls. 803-0930, star 930 on a cell phone. See you then.
Just like the one-winged dove sings a song, sounds like she's singing. Ooh, ooh, ooh.
Hey, I'm Esther Gilius, the tax lady, and we want to help you. We want to help you with your taxes. 803-0930, 803-0930, star 930 on a cell phone. If you're sitting there pulling your hair out, this is the place to call.
If you want to come and sing with us, we'll take those.
Now, and the other thing is, if you just are, just like that guy that's getting the pension plan, you'd be surprised how another way of looking at things can save you a lot of money, too. Like, I think we would have saved that guy a lot of money with that pension plan.
Yep.
Okay, just a couple other things before I leave the self-employment thing, is if you are self-employed, make sure you have your proper insurances. Right? Especially if you have employees, you want to make sure you have business insurance, workers' compensation if you insurance if you have employees. And if you have a net profit, you have till April the 18th this year to make a contribution to a simplified employee pension plan or that's an SEP, or a 401k. And if you don't have the money to do it, you can actually file for an extension, pay your liability, and you'd have till October the 15th to set up a pension plan, and that way you'd have your money. And don't forget your office and home deductions.
That's right. Office and home. That's going to get audited. Not really. But you could be given...
if you did it, and it's used regularly and exclusively for business, you need to take the deduction.
Right. And not to mention, on the Schedule C, you have the simplified method for the office and home. So you don't even have to worry about saving your utility bills and stuff like that.
That's exactly right. That's exactly right. Okay, let's go back to the phones. We'll talk to Richard. Hi, Richard.
Hello.
What can we do for you, sir?
Well, I have many years of unfiled taxes because I have a student loan that's been in defunct for many years.
Okay.
And the government's just going to take my tax money anyway. So I couldn't afford to get the taxes done and then have the government take all my money.
How much do you owe in student loans, Rich?
I'm not even sure. It's a pretty substantial amount.
What, 20, 30?
Probably 30,000 or more.
Okay. How much refund would you have gotten all these years? Do you know how much your average refund would have been?
A couple of thousand.
Well, if you let them take that $2,000 a year over 10 years, that would have been $20,000 off your student loans.
Yeah, but like I said, I was working temp jobs or I was unemployed, so I couldn't even afford the fees to have the taxes done.
Okay, but you know what? There's ARP, AARP does it for free. We actually do 1040As for free.
1040 Easies. Yep.
Easies, yeah. The sad thing is, and if anybody else is listening that is in that
In this
pickle,
boat.
when you don't file your return, that money you lose the refund after 3 years. I would suggest, Rich, if you're working still right now.
Well, yeah, I actually just got a full-time employment job.
Look, if you call us, we'll make sure we get those federal returns done for you, okay? I mean, because at least you'd be knocking it down. You're not disabled or anything, right?
Well, I have a disability, but it doesn't affect my ability to work.
All right, so your disability doesn't affect your ability to work.
No.
Because there is something in the law that if you are on a disability or you have disability, you're unable to work, that student loan can be forgiven. So it doesn't happen often, but I have seen where people with disabilities have their student loans forgiven. And that's, again, for anybody else that's out there. But if you need help, Rich, just give us a call. We'll make sure we at least get you up to date as much as we can on those open years, so you'll have that money applied to your student loans.
Okay, thank you.
You're welcome.
He's afraid of the student loans getting his money. Well, guess what? The federal government
Just
got
got
his
the money, and
all
it's
those other
applied
years.
to nowhere.
Yep.
Because if you have refunds, if those of you that haven't filed, and I'm sure there's people listening that haven't filed, and you're maybe feeling guilty about it, but the IRS isn't writing you. The reason the IRS isn't writing you is because you have refunds coming, and they're going to keep your refunds. They usually only write people that owe them money, or at least they think they owe them money. And when you take all the deductions and credits, many times you find out you have a refund coming.
Yep.
So if you have withholding and the IRS, and you haven't been filing, and the IRS is not writing you a letter, that means you probably have refunds coming.
Yep. And just so you know, 2013 ends on April 15th this year.
That's the last time you could file a 2013 return and get the money back.
Yep.
Right? I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're going to go back to the phone and talk to Mr. Joe. Hey, Joe.
Hi, how are you?
Good. What can we help you with, sir?
Yes, I have a question that 2 years ago, my brother-in-law, from Florida, kicked his mother out and came to my house, and she lives under my roof.
Okay.
She don't pay nothing.
Okay.
So when to make the income tax, should I put it under,
All right, can I ask you a couple questions, Joe?
Yes.
Okay. Now, she is the mother of your brother-in-law?
No, she's the mother of my wife.
Okay, so she's your mother-in-law.
My mother-in-law. But
Okay, all right.
With a son in Florida.
Okay, but she is your mother-in-law?
Yes.
Okay. And does she have Social Security, Joe?
She does, yeah.
How much Social Security does she get, you know?
Well, about maybe $600.
$600 a month, right?
Yeah.
Okay, so now the thing is, how much do you think your house is worth approximately?
$340,000.
$340,000?
Yeah.
Oh, okay. So for sure, how many people live in the house?
Me and my wife with the kids.
How many kids?
2.
2 kids. So there's 5 of you. So it certainly sounds like the fair rental value would be. All right. So it looks to me like definitely your mother-in-law can be claimed as a dependent. So make sure you put on when you're doing your return that you put her down as a dependent. She has no other source of income except for that Social Security, right?
That's it.
Okay. She's your dependent. How long has she been with you, Joe?
She's been almost 2 years.
Oh, my God. Okay, so go back and amend your last 2 years' returns. You're working, right?
I'm working for myself, but kind of like renting a chair as a hairstylist.
So, okay, you're okay. So, but you have income. Does your wife work?
Yeah, my wife works. Yeah.
All right,
Okay,
so
so
go back and amend.
15.
Yeah, he
and
said 3
claim
years and
2
14.
years.
Oh, I thought he said 3 years.
You said 2 years she's lived with you, right?
Yeah.
Okay.
Almost 3 years. Yeah.
Almost 3 years. Okay, so go back and amend 15 and 16. She's on your return. When did she come in 14? When did she move into your house in 14?
Last June.
In June. So that it's
June.
more than 6 months.
Yeah.
Yes, in June.
Yeah, it sounds like you may be able to amend 14 to. I would have to make sure that you gave over 50% of her support in 2014, but you have potentially 14 and 15 and 16. She can be your dependent. Okay.
She don't give me no money, so she can be my dependent.
Right. Right. Yep.
Okay, so I can write it down.
As a dependent, yes. And amend your 15 return and possibly your 14 return. Okay?
Okay.
All right, Joe.
Thank you very much.
Oh, you're welcome. Bye-bye. Joe sounds like a paisan.
Yes, I was just going to say.
Yeah. I'm part Italian too, Joe. So, but, here's the only thing on 14. He wants to make sure that she was in the house at least 6 months,
Yep.
and he furnished over 50% of her support. And if that's the case, then she'd be a dependent for 14. Now, if he's got enough money, it's a $4,000 deduction. If they're in the 20% bracket,
That's
he's looking at
$800.
$800
Yep.
per year, right? Okay, let's talk about rental property, too. And again, 8030930, 8030930, star 930 on a cell phone. I'm Esther Gullius from EG Tax, and we certainly want to help you. Okay, Mr. Chris. So why should people be careful about rental property?
Well,
what they're charging in rent.
I was just going to say, if that's what you're looking for, because you have to charge fair rental value in order, if you have losses, to claim the losses on your tax return. Otherwise, if it's your child and they're giving you $300 a month instead of $800, it's not a business. IRS treats rental properties just like businesses. You have to have a profit motive. So if you don't have a profit motive, the IRS says, no tiki, no washi, so you don't get to claim your loss.
Right. And so you would have to treat it as
a not-for-profit.
A not-for-profit. And how about that rent that you're getting?
Then that rent goes on line 21 of your tax return.
Right. And so you're ending up with the income.
Yep.
And it's really a penalty. So you want to make sure that if you have rental property, that you're renting it at fair rental value.
Right. Right.
And that means that, and it's really remarkable nowadays. You can go online and look at what rents are. You can, I know the last time that I was on an audit, it was on something, and the auditor, it was property in Florida, and they found out right there. They just Googled it.
I think Zillow has it.
Right. What your rent should be.
Yeah.
So you want to make sure you do that. The other thing is, for rental property, and there's a lot of rental property in Western New York, there's something new this year that is a safe harbor election that people can take. So why don't you explain that safe harbor?
Sure. That's if, say, you buy a new washer, or refrigerator, something under $2,500, normally
on your rental property.
On your rental property. If you normally you would depreciate that item 7 years, 5 years, depending what it is. The IRS is now saying if it's under $2,500 per item, you can make the safe harbor election and take the full expense this year.
Which is really cool. And I know I had several people who had rental properties come in and said, oh, I bought a window air conditioner, $500. Aha, we did the safe harbor election.
Yep.
So, but the thing is that you have to you can't depreciate some and do a safe harbor on
Right.
others. It's got to be
all or
uniform.
none.
Right. So if you had multiple stove, refrigerator, air conditioner, you could do your safe harbor, and that ends up to be a gigantic savings.
Oh, it does.
For
It can. It
tenant.
definitely can. It can.
Landlord.
For the landlord, right? And then also going back, I know calls are coming in, but with rental property, say you have high income, and you're over $150,000, and the losses don't impact your return, but maybe you're married and you work, but your spouse doesn't. Well, if your spouse is the one managing all the properties and works over 750 hours a year managing the properties, then they become a real estate professional and you get to claim all those losses.
Which is really, really important because people may not know, but once your income exceeds $150,000, you can't take any losses from rental property unless you are a real estate professional. And so, Chris brings up an absolutely great point. If you have a non-working spouse who's willing to say, "I'm going to take this under my umbrella. This is something I'm going to do," and they're renting the apartments, picking up the rents, and they're spending that time to manage the apartment, then that spouse becomes a real estate professional, and those losses that would have been suspended now are deductible on your tax return, which is an absolutely great thing to do. Right?
Definitely.
The other thing is that people want to make sure that you do is that you depreciate your property if it is rented at fair market value, because many people don't understand depreciation, so they just don't do it. But unfortunately, when you go to sell it, the IRS is going to say, well, even though you didn't depreciate it, it still counts in the year of sale because it's allowed or allowable.
Right,
so you want to
they
make
don't
sure
care. So.
But now you can go back and adjust that right now if you're somebody that hasn't been depreciating your asset, and you can make that adjustment so you can kind of pull a rabbit out of the hat, so to speak.
Right.
Okay, let's go back to the phones. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Ron in Hamburg. Hi, Ron.
Yes, hi. A question regarding the National Fuel Pipeline right-of-way. There was a timber sale involved. They issued a 1099-S.
Mm-hmm.
And is that a capital gain, and how do you figure out the cost basis?
It is. It goes on a Schedule D, and the cost basis is so much fun. You actually have to figure out how much that land cost you when you bought it, how much the trees were worth on the land. So if the land was barren, we'll say the land was worth $10,000. With the trees on it, the land is worth $15,000. So the trees would have a cost basis of $5,000. So if you got $20,000 for the trees, then you have a $15,000 gain on your tax return.
I see. Okay, thanks very much.
All right, thanks, Ron. Mr. Golias, that was very good, Chris. It was very eloquent. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we're going to go to David. Hey, Dave, how can we help you?
Hi, Esther. How are you?
I'm good.
Great. It's a beautiful day today.
It is. Where are you at, Dave?
I'm riding on the thruway right now on a 90 East.
All right. I hope you're on Bluetooth.
Of course I am. I would never break formal law.
What can we help you with, sir?
The FICA tax in the past, years ago, was considerably less than it is right now. But it's jumped quite dramatically from last year to this year. But the way I look at it...
You mean the limit?
You mean the limit on your wages?
No, yeah, I know what the limit is.
Okay.
But the percentage that you get back, in the prior years, I know you were able to get after you hit the FICA, that limit. But this year, I computed it at 7.5%, where in the prior years, it was 6% more of your check.
No. It absolutely has not changed. It's 15.3%. That's what it is. The FICA limit went up based upon the maximum amount of your wages, but the percentage hasn't changed.
No,
the
7.65 is the combination between Social Security and Medicare.
Right.
The 6% is Social Security. The 1% is Medicare. The Medicare you never get back. You only get back Social Security.
That's right.
I understand. So, but my point, once you hit that limit, what percent of your check is less? You get more of 6% or 7.5?
6.
Oh, the 6. The 6.
Oh, is it?
Yeah, the 1.45% that you as an employee pay, that's what goes on forever.
Yeah, they quite. Now, how do they compute that? Because that's one heck of a jump that they did from last year.
No, it isn't.
It's the same thing.
It's absolutely the same. There's been no change.
No, it was last year. It was 118. Now it's 127 too.
Oh, the limit again.
At the dollar amount, in other words, the total amount of wages you earn, you're going to pay FICA and Medicare. Once you get to that cap, it stops except for the Medicare portion.
Right.
All right.
And they're just trying to get extra money in Social Security's basket so it doesn't go bankrupt.
Yeah, right.
It's a wonderful thing. Okay.
All right. Thanks for calling, Dave. Appreciate your comments.
Oh, because it used to be, 80,000 at one point, then 90, and
Oh, yeah.
slowly.
Well, it's interesting. I had this conversation this afternoon with the gentleman that used to work at Social Security. And we were talking about really they should raise it even more because Social Security is the only means of support
For a lot of people.
of millions and millions of people. And at the present rate, it's going to go bankrupt. All right, let's go to Elaine in Lancaster. Hi, Elaine.
Hi, Esther. Good to hear from you.
Thank you.
I have a question about the itemized taxes.
Sure.
Under the general sales tax, if you go through a tax program, they'll give you, they'll ask you questions and they will give you an amount to deduct. Can you add the car sales tax on a new vehicle to that amount, or is it one or the other?
No, it's the flat rate that the chart allows plus a moving vehicle.
Plus a moving vehicle. Okay, thank you very much.
All right, thank you, dear. Let's
And
go.
that goes for leases as well, the sales tax on
That's
leases.
right. The moving vehicle.
Yep.
Right. And we're going to go to Jim in Buffalo. Hi, Jim.
Hi. I seem to not be able to get it worked out until like after the 15th, and so I end up filing an extension. But I always wondered, does that raise a red flag if you're always asking for an extension?
I don't think so. I don't think that extensions, raise. I will tell you that what I've seen this year, which is unique because the IRS is very much scrutinizing tax returns before they send out the refunds. And people are getting pre-audited before they send out the refunds now. Which is very much unique. I've never seen them turn this around. Like if you're doing a tax return, you did a tax return in February, and they're saying, we're not sending you your refund until you prove these deductions. So they obviously have that keyed in, but I never seen anybody flagged because they file an extension.
One more thing. If you're self-employed and you have a rental income, let's say, and you just started taking Social Security, I forget, do they count the rental income as part of your income?
No, they
not against your social. I mean, it counts to see if your Social Security becomes taxable, but it doesn't count to the limit of earnings.
Right. If you're the between 62 and normal retirement age, there's a dollar amount that you can make. It's like $16,740 before you have to start paying back Social Security. But your net profit from your rental is not part of that equation.
Oh, the 16 is just earned income.
That's correct.
What you do for work.
Exactly right.
Okay, I understand. Thank you very much.
Thank you, sir. Have a great day. And we're going to do Ron in Evans. Hi, Ron.
Hello.
How can we help you, sir?
Is there any point where you don't have to file a tax form?
Absolutely. Are you kidding? There's the minimum filing requirement, unless it's met and you have no withholding, then you don't have to file.
Right. I don't collect any tax. I don't pay any tax. So.
How old are you?
78.
And are you single?
No.
You're married?
Married.
Okay. Does your wife have income?
Just Social Security.
Okay.
And that's all you guys have, right?
Yes.
Then you don't have to file.
Okay.
If it's all your income is Social Security, you're good.
You're good. Okay?
Yeah, well, I was buying these TurboTax things and paying that money. I don't even...
No, you don't have to do it. Some people, I would tell you, file because they want to bring in to the municipality proof that they can get their STAR program. But truthfully, you don't have to file.
Okay.
All right?
Thank you.
Thank you, sir. And let's quickly go to George and Alma. Hi, George.
Yes, I have a question. If you've paid 2016 taxes, say 85-90% through withholding during the year, and now it's time to do the report, send it in, and you're unable to pay the balance, how would you handle that? And I'd like to hang up. And
all right, good enough, George. Thank you very much. In other words, if you have a balance due, and it's due April the 18th, there's several things you can do. You can set up a payment program, right? Right at the time you do your return. You can put it on a charge card, like 1-800-2-PAY-TAX will accommodate you. Many charge cards places will accommodate you and give you points for that, right? or you can just send the voucher with your payment slip in on April the 18th, and they'll take the cash. So what is not acceptable is not to pay it.
Yeah, to ignore it.
Right.
I mean, pay them what you can by the 18th. You can let them bill you for the rest.
Absolutely. Hey, I'm Esther Gilius, the tax lady from EG Tax. If you need the best tax help, EG Tax is there for you. Give us a call during the week. We're there 9 to 9. Thanks for listening. We'll see you next week.